Since we are talking sectors, let's also put the spotlight on the energy sector.
Right.
And JSW Energy came out with its earnings on Friday, and it was a decent set on a year-on-year basis, though the company has seen a sequential decline of sorts. Profit has also seen a dip of 17% on a year-on-year basis.
Right.
To discuss what transpired in the quarter gone by and what is the outlook going forward, we're now joined by Sharad Mahindra, Joint Managing Director and CEO at JSW Energy. Hi Sharad, very good morning. Thank you so much for joining us today, and Diwali greetings to you and your entire family at JSW Energy. First up, let's start talking about the results. Now, Mahanadi power plant, that's a very recent addition to your operational capacity, and in just about 1.5 quarters, it is contributing one of the most to the revenue. So how did you ensure all of that, and is that trend going to continue as far as revenue growth is concerned?
Yes, see, this is actually now a full 2 quarters. This was acquired in the month of March, March middle, around 10th of March. So it's a full half we have got with this. And the steps which we have taken is, one is the bringing in the efficiency, more reliability in terms of plant. The plant availability has increased significantly from last year, and this year in H1 has been in excess of 97.5%. The actual PLF of the plant is 76% as compared to around 65% last year. So these all have contributed, and also the operational efficiencies, which we have brought in by placing our team as compared to what it was during the CIRP process. So these are the major drivers in terms of reducing the operation and maintenance cost in significantly, and running the plant at a higher PLF and higher plant availability.
Sharad, let's also talk about EBITDA. Yet again, stellar margins at nearly 58%. So congratulations over there. What led to this 582 bips year-on-year growth? Are these levels sustainable? What's your take, and what's the plan?
Yes, as I told earlier, it is basically these EBITDA growth of almost in the range of 57, say 60, close to 60%. The key drivers have been the acquisitions of KSK Mahanadi, O2 Power, second unit, which you commissioned in March last year of Ind Bharat, and the fresh capacities of wind, which commissioned last year, post-wind season, and the new capacities commissioned during this half of the year. These are the key drivers, and we are absolutely certain that these are sustainable in nature. Thermal, in fact, is going to continue as it is. Despite extended monsoons, they have been able to perform at these levels. Second half of the year, normally the demand is better. So thermal will be the major contributor, along with the solar portfolio, which normally, because of the extended monsoons and H1, the PLFs at the country level, industry level has been lower, which are definitely going to be better in second half of the year over as compared to first half. So these will be the key drivers.
All right, so that's about EBITDA. But, despite all the other metrics remaining strong, your profit has seen a dip of about 17% on a year-on-year basis. So if you could just explain what led to this kind of decline that we have seen in the quarter gone by. Were any one-offs at play?
Yeah. See, profit after tax, definitely there is 17% negative growth. But we have to remember the cash profit I'll come to that, but cash profit has grown by 27%. See, we have to remember, if we compare a year back, September 24, my asset base was almost maybe about in the range of 60 odd thousand crores, which is now at 113,000 crores. There is an increase of almost 49,000 crores asset base, which again, this is a business of 3:1 debt equity. So the debts also have increased because of this, which is a combination of acquisition of O2 Power, acquisition of KSK Mahanadi, and also capitalization of our hydro project, which got commissioned now this quarter, and other greenfield capacity commissionings. So this capitalization has taken place, because of which the interest and the depreciation, this both have increased, which has resulted in the net profit going down. But if you see on a H1 basis, there is a growth if we compare even at that level. So going forward, we are absolutely certain, as and when these assets start delivering on an annualized basis, everything has been paid, but the delivery in terms of the revenue and margins is partial only. So it is a temporary phenomena. We don't see as a challenge for us. Profit is more important, which enables us to sustain our future growth plans.
Right. And is it possible to give guidance on revenue and profit for FY26 and FY27?
Yeah, see, when we see that we have closed the H1 at an operating capacity of 13.2 gigawatt, and we will be ending the year in excess of 15 gigawatt of capacity, which will be fully operational for next financial year. So, this capacity, we can assume that what we have given the numbers in terms of EBITDA in 6 months, going forward, second half, assuming thermal normally is better, especially this year when it was an extended monsoon. Solar performance is going to be better. Of course, wind and hydro reduces in H2. But with the mix, we have diversified mix gives us an advantage to maintain the levels what we have performed in H1 also. So it is there normally giving a specific guidance is normally not what we do. But yes, we are confident that we will maintain this momentum. It is not just one-off what you asked some time back.
All right, so the growth momentum is likely to continue. That's the word coming in. But, Sharad, in the previous quarter, you did tell us that the 5 gigawatt battery energy storage plant in Pune, that is expected to go live by the third quarter. So is that on track for now?
Yes, that is absolutely on track. Machine installation is almost complete. Commissioning of the machines plant equipments are going on. And in the month of November, we'll be starting the trial run. And we are absolutely confident that the plant will stabilize. And by December, we'll be starting the commercial production also.
Lastly, you had last quarter mentioned you were monitoring US tariff impact and said that importing solar cells could be a possible pain point. How is that panning out so far? Any update?
See, right now, when we see that one is that US tariff impact, we are not seeing much, but in terms of the slowdown in the demand of solar modules from India in US and also the amount of export which is happening. And now presently the commissioned capacity of solar modules in India may be almost 100 gigawatt. We are seeing enough availability of modules at very, very attractive prices. So we are sure that that is not a challenge, and we see this as a positive for the sector in terms of for the developers going forward. Enough capacity has come. Regarding cell, today's cell imports are allowed because there is a limited capacity which is there in India. But going forward, we are absolutely confident with the new capacities of solar cell manufacturing which are coming in. Maybe it's a matter of time when solar or cell also will become under the ALMM, will be restricted from imports.
All right, so you are betting on the domestic module manufacturing capacity. That's the word coming in. And once again, congratulations on your result, and also Diwali greetings to you and your loved ones. On that note, we'll let you go. And also with that, it's time for a quick breather on this edition of Deal No Deal. We'll be right back with more news and updates on the other side.